Hello YouTube, welcome to this introductory video about this financial model template. This is a financial model template for a software as a service company, SaaS. And I would just like to show you shortly how you can use the model, what the model is all about, and give you some just a bit orientation how to navigate around in this model. Before I start, the idea of this model is basically to give you a tool to develop a 5-year business plan, and then basically use that plan as a basis to do a evaluation on, and also basically show to your investor, if they invest now, how much returns they can make if they stay invested over a certain period of time. So I'm going now to show you shortly a bit the structure of this model. We have here in this Excel sheet, we have here 5 or 6 tabs. One tab is basically just a title page. Then we have here one page which gives you a reference for some of the financial terms used if you need to look up some of the abbreviations. Then we have here an executive summary page. On this page you will find basically two things. On one side you will find the main outputs of this model in a summarized form. And the second thing, you will also find the key assumptions on this tab. And now the benefit is, if you work through these assumptions, you basically can immediately see the impact on subscribers or also on the financials, returns, or also the resulting change in valuations. This gives you quite a good tool to run scenarios and simulations about your business. Then we have here one next tab, which is basically a tab which contains monthly financial projections, which is basically using a bottom-up approach. So you forecast first subscribers, then the pricing, the payment, etc., so that you, at the end of the day, you have also the costs on a monthly basis, so that you can basically get a very clear picture how does your monthly cash flow look like. This is especially important for startups when you have to when you run on a tight budget. You need to know how this is going to develop. Then a next tab is basically a condensed version of the monthly plan, and what we do here is we build yearly financial projections, and basically taking the calculated figures from the monthly plan into the yearly plan. And in this yearly plan you will also find income statement, balance sheet, cash flow statement, so that you get a clearer picture about the financial future of your company. And then below we should also might want to have a look at the financial ratios which result based on your business plan, and also how a DCF valuation would look like. If somebody does evaluation, then that's what your financial plan will tell him. You have some more sections here, and here at the bottom, just to show you this, there is one section which might be useful for investors if you raise financing, if you need to discuss the current valuation, at which valuation they enter, and an investor wants to see at which valuation they exit, in order that they can basically come up with an idea how much profit they can make. So these calculations are basically all here. They're linked to your financial plan, and this should allow you to put forward an investment case of interest to investors. We have here another tab, which is basically the customer lifetime value. This is just basically a more detailed calculation if you need to know how much you can afford to pay in the acquisition of a customer. This is basically based on the calculations before. I'll not go in detail into this. Instead, what I will do, I'll just wrap up here with the executive summary sheet. You can see here, you can play around easily with the assumptions. If you have here change the investment period, you can immediately see what's the impact on profits and the IRR. You can also simulate what happens, how would this look like if you change the entry valuation for investors. You will see that basically the IRR will change drastically if you, depending on what valuation you choose. And simulating the exit value, also you see directly the impact on this. And for your business plan, this is mostly driven by the number of subscribers here, how many new subscribers are added each month. This obviously can accelerate the longer you are in a business. So you can here also basically change around with change the assumptions a bit to simulate different scenarios, etc. You have here a tab to steer the pricing of your subscriptions. You have here basically three tiers of subscriptions. You can also assume how many of your customer actually purchase which tier. And also important is to think about collection of the payment. If you can manage to get payment for 12 months upfront, this might be quite useful, and then you can simulate how much discounts you need to give to motivate people to pay you, preferably upfront and as long as possible. You have here more assumptions regarding the customer retention and the churn rate. Some more assumptions about the customer lifetime value and the acquisition costs you can basically afford to pay. If the customer lifetime value in terms of profit should be higher than what you spend in acquiring a new customer, then you have a profitable and quite a scalable business if you manage to achieve that. Then here it goes further with the cost assumptions in terms of you can input your staff, operating costs, capital, basically capex, split here in two different types of category. You can basically play around. And last but not least, here also some general assumptions like the currency. If you like, if you're based somewhere outside the US, for instance, the Eurozone, you change here the currency, and all the currencies are changed in euro, which makes it a bit easier to actually use the model. And here some more assumptions for the tax rate, receivables, dividend payout, etc., so that you really can play around. Okay, thank you for watching this video. I hope you liked it. If yes, please leave a comment, give it a thumbs up, and hit the subscribe button. Thank you for watching.